Good morning, everyone. Welcome once again to Rally Academy, where we make daily profits. So this is the money market review. So basically, what we do here, if you are a first timer or recently joining money market review, we just analyze some of the market instruments to see how we can take advantage and make profit. So the aim is to make profit daily, right? Um, As usual, we have a lot of persons that are still not on the call yet, just about 15 persons for now. So I'd like us to wait a bit, just exercise a little bit of patience to allow more persons to join this call so that we can have a smooth session, right? Just in a few minutes' time, we are going to kick off this particular market review. But meanwhile, okay, so in a few minutes, we're going to really kick it off. Just stay tuned. I'll be back.
No volume.
I'm not talking actually. I addressed everyone here earlier that we should exercise patience to wait for more persons to join before we start. So I wasn't talking, that's why you're only hearing it. Good morning.
Okay, thank you.
Okay, good morning, Mr. Hassan, and good morning, Olufowokan Bamishi. Yes, I wasn't speaking. That's why we weren't hearing this. I addressed people here earlier just to exercise a bit of patience for more persons to join the call before we actually start. So I was just trying to scroll through our fundamentals first. All right, so I guess we can start now. Every other person joining us will just join us and hopefully catch up from wherever they meet us. Meanwhile, this video is also live streamed on YouTube, so you can as well head over to YouTube and watch this same video. So you can play it back in case you miss anything, or I might not have time to explain certain things much, but in case you didn't really get them well, you can go back to the video, watch it again, and understand fully on YouTube, right? So that being said, welcome once again. So let's kick it off. Now we're starting from our fundamentals. Basically, I always tell you that price, there's a popular saying scientifically that an object remains at a state of rest or a state of rest except an external force acts on it, right? I might not be a science student, but I really, really know that for sure. So now an object remains at a state of rest, which means price will not move except acted upon by an external force. There are some externalities. There are certain things outside of your charts that actually moves price. Okay, so we call some of those things fundamentals. You know, they are economic. They can be economic. They can be political. They can be social. You know, they can even be natural disaster, environmental. So all of those things are what we take into account. But majorly, we look at economic, which also by economic, we are talking about the economic data, economic events. Now, these events have a way of affecting the prices of goods and services, especially in major economies. Now, they usually have various means of measuring how well they are doing. You know, these people are very intentional about growth. So they measure certain parameters at every point in time. So they have parameters to measure employment, like the NFPs from the US. You know, they have parameters to measure inflation, which is mostly CPI. They have parameters to measure the GDP. They have parameters to look at the interest rates. They have parameters on a lot of things. Now, those are the things that we are looking out for. And those things are serves as a pointer to know if the economy is doing well at every given time or not. So basically, we follow whatever uh, their parameters are to understand what they are looking out for. If they say our economy is good, how do we know? The economy is bad, how do we know? So Forex Factory here is one of those major sites. Investing.com also one of the major sites where you can get first hand of those data. Now, for today, in the 5th of March 2025, and it's Wednesday, as you can see here. So we have the time as well as the currencies that we are looking out for. So let me refresh this page in case of anything. All right, good. So now for today, we've had that of AUD Australian dollar, which came out around 130 AM. This is the GDP, the quarterly GDP. It was exactly the same as forecast. So in that case, the Australian dollar might not really gain strength, and it might not lose strength, so to say. So, but we expect price to actually be either greater or lower. Um, so for today, we also had, as at 3:10 a.m., the US President Trump speak. You know, he was speaking, and this is not a data news. Hence, the details, you might need to either live stream it to understand what he's saying. But economists usually react to some of the statements, especially when he's talking about things that affect the economy. You know, they usually look out for that. Now, 8:30 a.m., which we are expecting, it's just a few minutes past 8, it's 11. By 8:30 a.m., we are going to be seeing the CPI, that's the Consumer Price Index for the Swiss franc. So this is also going to serve as a pointer to the direction the economy will trade. Now, this inflation data, actual greater than forecast, is actually good because, like it is said here, economically, so consumer price amount for majority of overall inflation. Inflation is important to currency valuation because rising prices leads the central bank to raise interest rates out of respect for their inflation containment mandate. So actual here greater than forecast is good for currency. So we need a figure greater than 0.5 for this particular CHF to become strong as at 8:30 a.m. Anything less than 0.5 is bad for the CHF, right? But 0.5 is the same, and if that happens, we might not experience volatility in the markets. For instance, the forecast for GDP was 0.6. If it was greater than 0.6, it would have been good. If it was less, it would have been bad. But it came out the same, so hence being black. Um, Apart from that, this afternoon we're going to be looking out for. Now, I'm not talking about every other thing here because they are low impact. They are low impact, low impact. So we are not expecting volatility from them. But the red envelopes, they are the high impact news. Brown envelopes too count, they are medium impact news. So, but the red envelopes are focused. The ADP non-farm employment change. So this is a prelim, like a prelude to the NFP. A prelude to the NFP. Also, actual greater than forecast is good for currency. Just check out for the number of persons employed into the working sector, apart from the agricultural sector as well as the government sector. Mostly looking at private employment. So if you employ more people, it's good. So we need a figure greater than 141,000 for the USD as at 2:15 p.m. to become good. As well as 4 p.m., the ISM Services PMI. This basically talks about production. So they take a survey of producers and look if the prices are increasing, the purchasing powers are increasing or not. Meanwhile, 50.0, anything above 50 shows that the manufacturing sector is expanding, and anything below 50 shows that there's contraction. Contraction means the rate at which people are buying is not much, hence the rate at which production is going is not much. There's no much circulation. It can be interpreted in a number of ways. It has multiplier effects, right? So, but basically, the major thing you need to understand is we need the figures to comfortably be above 5.0. So the forecast here now is 5.25. So anything greater than 5.25 is good. Anything less than 52.5, right? 52.5, anything greater is good, and anything lower than 52.5 is bad for the USD. Also, do not forget that this week, by Friday, we are expecting the NFP, the almighty NFP, one of the major market mover shaker. So by 2:30 p.m. on Friday, we'll be having NFP. Then by 6:30 p.m. the same day, Friday, the Fed chairman, Jerome Powell, is going to be speaking. We all know that when the head of the Federal Reserve is speaking, price moves. Okay, so you don't joke. And that's why it's also part of the red envelope data, although it's not the data news. So that being said, we are just expecting CHF by 8:30 today, 8:30 Swiss franc, and by 2:15 as well as 4 p.m. These are the major news that we are looking out for. So all things being equal, let's head over to our charts. Let's start from the USD JPY for Euro JPY. Okay, we'll get there. But let me just let's finish USD JPY. Now this is a 1 hour time frame. If you use your lower time frame, sometimes you might be confused as to where the overall direction of price is. So the first thing is to identify the overall direction, one. The second thing is to identify your major swing areas. By swing points, I mean the turning points, okay? Swing highs, swing lows. So, and you do that, you can do it from a 1 hour time frame, but sometimes you can also do it on a 4 hour time frame. Oh, the CHF before the news. Okay. There's still time. There's still time. So I'll get there. I start from USD because USD has been a major concern. Been seeing price dropping over time massively. So yeah, price has been dropping over time massively. Price got to a major swing point now. So is it that price about to change? Because obviously liquidity has been swept here, but you understand what I'm saying very soon. So what I mean is this. Let me take this out. Now, on my 4 hour time frame, especially, then zooming out, I like to see the major swing points. By swing points, I mean the major turning points. So for instance, the swing highs and the swing lows. Swing highs, swing lows. So let's consider when price was going to the downside. We bring it here. When price was going to the downside. Okay, started going to the downside from here. Okay. So the last swing high it made was here. This was the last swing high price made before it started dropping. Now, when it was going up, obviously, this was the last low it created. It created this last low, right? So if I extend that, so you see that price came back to this low, took out this low, took out the low, respected, then kept pulling to the downside. So I want to take cognizance of this low, right? Then created another low here again. Now, these are very, very important. I just want to show you how market structure will help your trading. If you do not understand market structure, then you will always be at the mercy of the market. Market structure is king, actually. It's like the foundation of everything you want to do. Market structure is the foundation. So irrespective of whatever you're looking at building the market, whatever profit, whatever strategy you're talking about, market structure is like 50% of every strategy that has the potential of working. So if you can understand market structure, you're 50% there. All you need to do is to find your entries. Okay. So now, I mean, when price is going down, you breaking previous support. This was a support before. Price broke it, created another support level here, right? Because if I created 1, 2, 3, broke, created 1, 2, 3, broke it again, right? And when it broke it, where did it go to? It came to this level, right? Notice here again, came here. Now, from what I just analyzed here now with market structure, it makes it easier. It makes it easier to somewhat predict price. It breaks down the work. What do I mean? So from the last high that price gave us before it started to drop, all things being equal, so price broke it, couldn't go above or went slightly above to whenever it goes slightly above, what we do is price just swept liquidity. It came back down, created a support, respected the support, went back to this point. So if price is going up, I'll be waiting for it at this previous swing. Let me go to my 1 hour time frame. So I think it will be clear on my 1 hour time frame. So see what I mean. The moment price broke this support here, all you need to do is whenever price rallies right to the upside, you are looking out to take a sell position from the previous areas. Now, the problem now is exactly where do I sell from, which I'm going to show you in a bit, but understand where to sell from first. All right. So you want to pick out sell, you want to pick out sell, you also want to pick out sell. If your stop loss is not that close, then you still make profit here. So you see, now all we are waiting for is that massive sell that will take out this support levels that we have here, right? Which we had here. Now, this cell created a footprint, which we call supply, okay? Now, with these footprints, whenever price, so you might not know how far down price will go. Just wait for price to go down. When it starts retracing back to the upside, obviously, at this point now, price is consistently breaking support. So we are looking out to sell, to follow the overall direction to the downside. So where do I sell from? You sell from previous highs, where price has rallied from. Sorry, where price has dropped massively from. So as price is going up, I wait for price. If you can get to this level, then I will sell again, sell again, sell again, and my target to be back to this level here. Which price got here? To have hit TP. Now it went back up again, not that price is trying to go up. So I'll be looking out to take a sell again here. Meanwhile, every time you're taking a sell, you always have your stop loss. For instance, you take a sell here, you always have your stop loss above the previous high. Some people can target 15 pips, 20 pips, 30 pips, basically, according to your risk appetite above. So now, if I want to sell from here again, even the price stop from here, and as I'm taking my sell order from here, you will just calculate few pips above and set your stop loss. That's all. Now, if it goes, you have more risk to reward. Notice that my stop loss is not that far, but my TP will be far, all the way here, right? And this is a 1 hour time frame. Good. Now, after the third touch, 1, 2, 3, the fourth time price broke this support again. You allow it to go, 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 go. It got to this point, it started to retrace. Where will you be waiting for it? At this previous support level where it just broke. One, not just that, there are two criteria to it. The previous support level where it broke and where it created a particular pattern, which I'll also show you, which is for price dropping, we have a drop base, drop base, drop base, drop base, drop base, drop base pattern. And price, we have a rally base, rally base, rally pattern, okay? So where price was doing the base is where your focus is going to be. We have a base here. So price came to this level, sell again, you know. Now price took out this one, right? Now, but notice the drop, okay, there was a base here. That was why price could not get as high as this initially. Now price got here, sold, right? So from this is now, or this has now led us to current market price. So this is current market price. So what do you think will happen to USD JPY based on this? What do you think will happen? What do you think will happen if price, so that means if you want to sell, you want price to go as high as this, you know, to get a better risk to reward than a further drop, right? But also do not forget that there's a 10% chance that price will take out this support. That price will take out this support and go to the upside. That's why our stop loss is there to save us. Okay. Now, if price breaks this particular level, it's what we call change of character, which means price want to change from being a downward trend right now to becoming an upward trend. Okay, that's our intermediate trend. So we'll be looking out for buys instead of sell trades. Okay, so that's for USDJPY. Meanwhile, for USDCHF, I think we took more time here. Let me take this out. Floating. Okay. Where's my USDCHF? Okay, let's say CHFJPY. CHF. So like I said, if you're looking at it from your lower time frames, it might be. So I go to my 4-hour time frame, I zoom out to see the direction. So obviously I've been seeing more of the downward movement. So my job is to mark out my swing points and see how well price is reflecting these levels. This is CHF JPY. Okay, my job is to mark out my swing points. So which is I have the highest high here. Okay, this high level at this point here. Then created a support, right? Created is from here, created this support level. Let me go back and see. Okay. This was a support it created. Okay, so you see that when it finally broke the support, we tested it and kept pulling to the downside. And going more to the downside, created this particular support, came here before it retested. So this was how far down it got to. Okay, this was how far down it got here. So it created the support, went back, retest, came back, took out the support, came back, retested, but went slightly above, but still came back inside. And the last support we have is here. Is right here. Okay. So which means potentially this is my 4-hour time frame. So I will now go to my lower time frame, like my 1 hour. Okay, so you see price is trapped inside of this range. Inside of this range. So most likely, if the news comes out, one of two things will happen: go back to this level and possibly come back to the downside. Now, if it breaks, then we might be looking out for continuation of buy. But if it goes to the downside, then I can assure you, most likely, price will come all the way down to this level, all the way down to this level, right? I think, let me do USD CHF. Quickly before, all right. Okay, so this is what we have here again. That it's not completely, because you see that here price has been going to the upside, but I think there's a change of character. So when price started pulling to the upside, this is the support. Okay, so for up, we are looking out for support, down and up. Now we got to this point, took out this particular resistance. Sorry, we tested a couple of times and it has taken it out. You see these highest points, came down, took it out, came inside, retested, took it out. Now it has broken finally. So on my H4, sorry, on my H1 right now, this support is very far. Where's my 4-hour time frame? If I'm to extend this, okay, so this is what I have, this range. So if this news comes out, one of two things: it's either it's taking me back here to retest, or it's taking me down. It's taking me down, right? One of two things will happen. So now it looks like price is trying to head to the downside. It looks like price is trying to head to the downside, because you see price is moving down, 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 down. Okay, so good. Yeah, so there you have it. What was the result of the news? Okay, it came out good. CHF should be strong. Oh, yeah, USD CHF. Obviously, USD is, hence you expect price pull down, right? Price pull down. And so this did not go as crazy as we might want it to go. So CHF didn't gain that much strength. Just unfortunately, USD is down. CHF didn't get that much strength as you'd expect. If it did, then you'd have been seeing price tearing down and keep pushing. I'll be expecting price to even go as low as this point right here. But all things being equal, I still expect price to do some downward movement. But to be safe, if I would like to sell this guy, to be safe, if I would like to sell USDCHF, I would want price to come to this level. But it will obviously pierce above and come here before I can have a good trade, right? Before I can have a good trade. To come there before I can have a good trade. Okay. So now let me show you the pattern I'd like you to follow in this market in order to maximize profitability, irrespective of what you are trading. Now, it works more for some instruments, especially with volatility, than others, okay? So, but the first things you need to do is to identify your trend, like we have done right here. You identify your trend, not the overall trend, but at least the intermediate trend, where price has been going or wants to be going for the next few days, few weeks. So once you align, for now, it's sell. Price has been going down. We are looking out for sell. So where to take our sell from is now what we are going to be doing. So for you to sell, or for me to sell, yes, I need someone to buy, right? Whatever I want to sell, I need a buy. And whenever I want to buy, I need somebody willing to sell to me. Okay? So somebody sells what I bought, or somebody bought what I am selling. So for there to be a sell here, obviously there should have been a buy first. Or let me show you with any other instrument that you most likely understand. Oh, this pattern I showed you last week. If you were with me last week Wednesday on this particular review, I showed you this MACD, trading pattern on your lower time frames, which you can use to scalp. For those, I think I got some responses from people who have been using it, which was going well actually, going well. So let me show you, for instance, I need a particular instrument going in a particular direction. Okay, let's use our USD JPY, for instance. Okay, now it also depends on volatility. So let me show you when price was going to the upside, what you would have been seeing. Okay, so let's consider when price was going to the upside, right? So, but before now, price is going to the downside, so it had to change direction. So see what I'm saying? Now, for me to buy, I need a sell first, right? So this is what I do. After this sell, there was this overall buy. Now, the buy has to be greater than the sell. I mean, this sell, this drop to the downside. Then I noticed this massive move to the upside, right? So after this has happened, after the whole of this sell, this massive buy has happened, especially when the buy was sell. So what I do is, where the sell started from here, I will mark it. Then you extend it to the future, to the lowest point, extend it to the future. This becomes your trading zone. This is more like your order flow, which means whenever price taps back into this point, into this area, you are going to be having more buy trades. Now that's one. This range is wide, is very wide. So I need to streamline it down, because I obviously, some person might be taking buy from here, and price will still come inside. You might be taking your buy from here, price still goes, you have some drawdown before price finally goes. So remember, there's a pattern. There's what we call a rally base pattern. Rally base means either price does slight drop or it ranges for a bit. Anything, maybe a slight drop, or like this, or like this, or it just ranges for a bit. Then it continues again to the upside. This is what we call a rally base rally, right? So what would experience is price will need to drop back at some point into the base. This is more like a rally base pattern. So that's what I'm trying to say. So you look out for this pattern. Now you see a rally base, rally base, rally base, rally, then a drop. Okay. So each of these bases, they are very, very significant areas for you to keep buying from. So this is the closest base to this high. So if you mark this base right here, the sell candle before the buy, that's the sell before the buy. All right. This is the sell before the buy. Notice that price came back to this sell, then bought again. Now, if it cannot go to the upside, then it will target the previous base before this last base, the one lower. So you notice there's a base here again because there was a rally base. This sell candle, so you mark the high to the low of the sell and you extend to the future. You notice what? Price tapped into this other base before going to the upside again. Now, price took these two bases like 3 times before price went massively to the upside again. So when it went massively to the upside, notice that this was the last base, a rally base, slight base. Remember, the base is not massive drop. It's just like a little bit of drop or then continuation, right? So price did it again here. See this base? So you can mark the highest base to the lowest base, extend it to the future. Notice that after price went, it came back to this base before continuing, right? So if you keep doing that, then you win way more trades, like you would win way more trades. The market follows this pattern a lot, a lot. The condition, so after price has gone to the upside, it is not wise to buy after price has already. You need to wait for price to drop first. Before you buy, make sure there was a drop. So you always buy at the drop before a massive buy. So I noticed this massive buy. Was there a base before this buy? Yes, there was a base. You see these two bearish candles? So I mark the highest to the lowest. I extend it to the future. What do you notice? Price tapped back into the base before continuing to the upside. All right. Now, you see price going, as it's going, it's doing rally base, right? So even if you mark this small base here and you mark it like this, you notice that price came back, tapped into it twice, then continued, right? Now, for me to keep buying, I will mark this base also. So this is where there are times where price might not really come back to the base here. So there was a base here, these two bearish candles before this upward candle. So price did not come back to this base. So it only did a rally, base rally. It didn't come back here. Because I would have been waiting for it to buy anywhere around here, but it didn't. Okay, that's one. So, but you notice it kept pushing, kept pushing. So this pattern formed a base for me because price kept going to the upside. So if I would trade it, I would then shift my focus to this base, which is these two bearish candles right here. I'll shift my focus to this base. So what do you notice? Price tapped into this base. After going to the upside, it tapped into it, going there, it came, tapped into it again, then we kept pushing. So that is the pattern we use. Now for a sell, you need a drop. Sorry, you need a buy before the sell. You need a buy before the sell. What do I mean? When price is massively trending to the downside, you can see these two buys before this sell. Okay, you see this buy before this massive sell. So you mark this buy from the high to the low and you extend. What do you notice? Price came back with this candle, tapped into it and continued sell. Right? Now, after price sold, before this massive sell again, there was this buy to the upside where there were actually two, but let's consider this buy. So if I want to keep selling, then I need to shift my focus from it to this buy. This buy candle. So, and I extend it. What do you notice? Price came, tapped into it, so tapped into it, so, right? Now, the idea is until price takes out the last support. So when price sold from this move here, this was how far down it went. When price is selling again, I need price to take out this level and go lower. Failure to go lower, I will keep selling from this point. I will just keep selling from it. So if I sold here 1, you didn't get here, came back, I sell again, 2, I sell again, I sell again, I keep selling. Price is looking at it out, I keep selling until price finally. So if I keep extending to the future, you notice that I will keep selling, we'll keep selling, we'll keep selling. Well, sometimes it's dangerous, but I want to pull out until price finally took out that support level. right? So if you want to keep selling again, notice that before this massive drop, there was this buy candles to the upside, right? So that is what we are going to be using to sell. So from the lowest point to this high point of the buy, I extend to the future. So I sell from here. Now I keep selling until price takes out this lowest drop it came to, right? So you sell, it was struggling, but gradually coming down. It got here, maybe TP hit. It came back again. What do? We sell again, right? We keep selling. It came back there. What do? We sell. So our reference is we'll always be selling from this level until this low we created from this sell that we got this pattern from is taken out. That means breaks it to the downside, right? So if it doesn't, we are not looking for any point again. That is your sell point. That is your sell area, right? You keep selling until it takes it out. Now it has taken it out. So you see that there was a buy. Okay, there was this buy before this sell, right? That's one. So what happened is before this major sell, which is the origin, you notice that price came to that point again, is where we are selling from again. So that's why I tell you there are patterns you need to study. So if we sell from here, this is the pattern here, and this is the lowest point it got to. Until it takes out this lowest point, we keep selling from there. So we sell from there, came here, and finally it has taken it out. Now, the moment it takes it out, we are looking for another point to sell again, right? Now, which we have 2 points. We have one, this major massive move to the downside. Before this move started, we have this buys to the upside. All the way here. All the way here. All right. So let me just mark it to this 1 and 2. Okay. So then that is one, because it just kept giving us this drop, small base drop, small base drop. This is the major area we want to be selling from. Now notice that at some point price go back there. So our sell is hit. Then where should price take out? After selling from here, price should take out. Okay, this is more like the lowest point. Yeah. Right. Before we experience some major retracement. Okay. So price took this point out and it's trying to go back up again. So in trying to go back up again, we'll be looking out for, it took it out but not convincingly. So it means this area is still valid, which I marked here. So this is where you would want to be selling USD JPY from, right? So if you can follow this pattern that I showed you, then you have an edge in the market. That means you have something working for you that is going to give you more winning trades. Now, I'm not claiming that this works 100%. No, I don't think we found that thing that works 100% in the markets. Doesn't. But at least for my own use, I think it works 70, 80. Now, it also depends on if market is just seamlessly respecting that its pattern. You know, you will enjoy it. You can have a wonderful week. You can have a wonderful 2 weeks with this pattern. Like you will just be seeing blues everywhere, blues on your phone, blues on your PC. You'll be seeing more of profitable trades. In fact, you will hardly lose trade. Sometimes you might just have to draw down, or maybe price just went to hit your stop loss, or eventually still go to that direction. If your stop loss was too tight, you'll come back and be like, whoa, or if I've adjusted my stop loss, you have wonderful week, wonderful 2 weeks, possibly even wonderful months. Then obviously, market wants to change structure, it scatters a bit, then arranges itself. So this is what you should be using to pick out your trades. So in other words, let's now couple everything together. This is USD CAD, right? First of all, know the direction which price is moving towards, right? So, well, this one looks up, it ranged, came down. So this is indecisive. This is a ranging market, right? So will not be a good market to practice this on. USD CAD. So let's see NZD USD. We need a particular instrument that has a definite trend. Excuse me. That has a definite trend. Okay, someone is raising hand. Kenedo. Okay, where are you? All right, please go ahead with your question. You can unmute and go ahead. Before
Okay,
Oyeshino.
good morning.
Yeah, good morning, sir.
Thank you for the picture. So please, a quick one. Please, this thing that you just said now, this strategy that you just said now, please, can you
Yeah.
recap a bit? I really didn't get it.
Okay, we wouldn't have time to recap. That's why I mentioned earlier that this same strategy, this video rather, is being live streamed on YouTube. So you can go over to YouTube and just type Rally Trade, then click on
Okay.
live, where we have live videos, like sessions like this. So you will see this video, just watch it again, right? Yeah. So I mentioned earlier that what I want to show you, I might not have time to be repeating, but go back to the video online, watch, and you get the full understand, right?
All right.
Okay, you're welcome. So, who else? Yes, Oyeshino Oyekomi. Please go ahead with your question.
Okay, please, could you help me
Hello.
tell me what is happening to Euro JPY?
So
Okay,
I'm not
the one that
answering my
asked-
question.
Yes, Akpo.
Okay, GBU.
Oh, yes, what's your question?
Okay, please, I want you
I
to
said
analyze Euro JPY.
Euro JPY.
Yes.
Okay, any
So
other
can you
person?
analyze? Can you analyze USD?
Analyze what?
GBP USD.
GBP USD. Okay, Euro JPY and GBP USD. All right, all right. Okay. All right, so let's everyone just be mute again and let's continue. So let's do Euro JPY first. EUR JPY. Let me see if I have it here first. Okay, let's see. USD, GBP USD. I think the last time I told us that we are going to be buying this guy, it should be pulling to the upside. That was last week, Wednesday. So it was Monday, Tuesday, Wednesday. Went up, dropped, then kept pushing to the upside. Okay, so let's analyze it now. GBP USD. So this is 4 hours time frame. Now, obviously, you see that price was moving to the downside first. Then now we now have a bit of an upward push. Sometimes you might have a good trend line that can fit into this. Sometimes you might have a trend line. So you know when to keep buying. So let's follow our pattern now. So from this point here, price has been pushing to the upside. So it created this low. This is the first one. Created this low and created this low again. So if you follow the pattern, you will see what we are talking about, right? Let me just, if you follow the pattern, you see what we're talking about. Now, I need to do this on lower time frame, like H1. H1. Okay, good. So you see, before this buy, there was a sell, right? So if you mark this sell, you should have hit this buy. I keep pushing, keep pushing. So you keep buying from, let's say, this base now here. You keep buying from it, you notice that you'll be having buys, buys, buys. Let's mark that. So once you build it up to current market price, you will understand what we're doing. Let me make it bolder. So you see this rally base, right? Base, this bearish candle, this sell candle. Good. So when I mentioned that if price doesn't hit your stop loss, if it's not too tight, so if your stop loss is too tight, it will have taken you out. But if it's not, you notice that even if you buy here, small drawdown, then eventually profit. Came back there again, buy again, massive profit, and you finally took out this high point it went to, okay, which is good. So keep following that same pattern, keep following that same pattern. So you have this drop before this buy up again. Okay, this drop before this buy up. So all I can say for GPUSD is that we should keep expect a continuous push to the upside. So let's look out to current market price. You can see it's breaking resistance, keep breaking resistance, keep breaking resistance, like that, like that. So this massive rally base, Okay, then rally base. Good. So we have a base close to our rally. So we have this base, this sell candles close to our rally. So it's not that far. We can keep buying, or you wait for price to drop back into this level. Now, if it breaks it to the downside, then obviously this is the next base that we have for price to buy from. For today, we have this 2.1, 2. So yes, we keep pushing to the upside for USD, GBP, USD. Then, in case you're already on a buy, perhaps you close out or you set a stop loss at some point. Right? Okay, Euro JPY. Let me do this. So yeah, for today, we have indicator-based trading strategy. There are some wonderful indicators that if you don't want to stress yourself doing so much analysis like I'm doing, yeah, some indicators that we have can actually help you, to know when to take these buys and sells. So, but you just need to learn how to use indicator, that's all, which I'm going to be doing today by 11 a.m. Although it's a physical class, and it's going to be for those who are in Abuja. I might as well do an online version for those persons who are not in Abuja right now. I will take your question, Innocent, but let me quickly just look at the Euro JPY. Now, Euro obviously has been doing well. In fact, as of yesterday, from Euro US, gained over 0.80% over the US dollar, right? So I think the Eurozone is now trying to do well. So what you'll see from our, 4-hour time frame, you notice that price was giving us some dips. Price was giving us some dips, sell, 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 sell. Then let's mark our major swing areas. So this was a particular support level. Okay. Awesome. So this support price bounced here once, bounce, 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 broke, came in, expected a bit, bounce, and it's getting to that level again. So Euro JPY might not go too far again before it pulls back to the downside. So in the spirit of looking out for sell trades, so let's from the origin where we had massive sell, okay. Okay, this was a sell. No, it's choppy. This is too choppy. I need clean cut massive sell. Clean cut massive sell. Okay, but irrespective, this is a sell, this is a base, a sell, a base. So I think this base is also very significant. This base is also very significant for us on Euro JPY. It needs to go slightly up. Okay, it's a bit of a wide zone. So yes, maximum, which at the end of the structure, we should have this to be selling from, which price is currently. So price is at that point. Okay, you can notice that price has started struggling. Okay, before price got to this point, see smooth and clean push to the upside. Now at this point, price has started to struggle. So obviously, you might want to go in for short trades, that's your sell, but remember to have your stop loss somewhere above in case the sell has ended and price is about to start pushing to the upside. Yes, Innocence, please go ahead. You can mute. Go ahead your question briefly so that we can round up.
Thank you, sir. Good morning, sir, and good morning, everybody. I really appreciate your class, so thank you very much. It's very highly appreciated to you. Sir, please, I want to know, is this strategy you just showed us, is it the same as the breakout strategy?
No, it's not. It's not. This is not the breakout strategy.
Okay.
This is more like order flow. So we are following the order. We are flowing with the order. So you need to know in which direction are the orders going to. The orders are going to the upside. So buy order. So you're just flowing with the order from buyers and sellers. Is a fusion of both markets. Is a fusion of both order blocks and supply demand.
Okay.
Yes.
Okay, sir, please, where can one download all these indicators from? Which sites?
Oh, okay. If I drop it here, you might not be able to get it, but please just contact your account manager, and your account manager would directly send it to you. I wouldn't just want to drop it because we have different indicators for different categories. Okay.
Okay.
Hence, I wouldn't be able to drop it. Contact your account manager. Based on your category, you'll be sent a link where you can download them.
Okay. All right. Thank you very much. I really appreciate it.
You're welcome. Clement, two other persons' hands are raised. Clement, yeah, please go ahead, Mr. Clement. Before Matthew.
The class. Yeah, in addition to what the last speaker said. Okay. Yeah, I said
you're welcome.
Thanks so much. Last speaker also request for the indicators from our account managers, or is it just only him?
No, everybody can.
Everybody can. Yeah, I joined the class. Yeah, thank you for that. I joined the class late. I don't know if maybe you've done US 100.
No, I have not. And we're running out of time. I have not. Let me just quickly do that.
Okay, thank you, sir.
You're welcome. You're welcome. All right, lastly, Matthew, please go ahead. Just 10 seconds. Okay, I guess you're not asking any question again. So let me round up now with indices US 100. Okay, we didn't do gold. Gold first. Quickly, gold first. Gold was trying to misbehave, like not literally misbehaving, but we don't know if it wants to start giving us some sales or it wants to just give us a massive retracement and all. So, but now I think there's been some significant recovery. Hence, we might be looking out to possibly continue buying this guy until possibly gets to the last high. So what do I mean? Now, these are the major swing points for this gold. So let's look at this drop here. This drop here came to this level right here. The price respected smoothly. Okay, so we had this area again right here. Okay, so two major areas that we have right here for gold. So if you look at my 1 hour time frame, if we are to be following the order flow, right, the order flow based on when it was selling, when it was selling massively, it just kept pushing. And now that it's buying, okay, so we would have been looking out for buys around this area for which the moment price went out, tapped into it and kept pushing to the upside. Now, so we have a rally, we have a base rally again, which is this. So we'll keep buying this gold until price, if price comes back to this level, then I would want to buy it. If price comes back to this level, then I want to buy it. So price creates, this was the last base, price did this, and it's trying to drop here. It's stopping at this level right here. So if price can summon the courage to come, drop all the way here, then we'll buy it up. Okay, so that is for gold. Then for US 100, so US 100 also did some significant drop. On my daily time frame, you will also notice that it dropped to a significant low, this level right here. Okay, it dropped to this level right here. Okay, that's one. Now, if we are now going to, so from here, possibly price wants to start pulling to the upside. On my 4 hour time frame, this is how it looks like. So wow, it's already 9. Okay, so let me look at for 1 hour time frame now. Now we can see we have been having some significant drop, and significant drop. So if at all this price wants to keep dropping, it has gotten to a significant point. I expect that price might change direction. If price keep dropping, you want to sell again, then you need to wait for price. The last base we had, see this base drop, right? This base, these two buy-up candles all the way here. So if price can get here, has it mitigated already? Okay, so if price can go as high as this, then keep pushing to the downside and expect price to take out this way. Okay, but if it breaks above this place, then yes, we might be looking out for buys. I'm sorry I can't take more questions. I need to leave. I have another meeting starting 9 and it's 9:01 already. But please go over to YouTube. You can go over to YouTube, head over to YouTube and watch this video again, right? So, Sammy, sorry, now MMR will take my time. I did login now. I did login. I'm logging. Thank you. Good morning, everyone. Good morning.